So I'm gonna quickly go over the NASDAQ trade that I took this New York session. It gave about it's very close to 9R now, 8 3/4. So it's very close to 9R now. But going about the trade setup and the narrative, the best kind of counter long comes after the demand fails, as many coaches have said, including Blackwaz and some of my very good traders like Cheddar, Juan and Param and others. Sorry if I forget to mention you. Anyways, the demand fails, we take all this liquidity. We have also, this is a 15-minute chart. Let me shrink it up a little bit. We have a initial reaction to the demand after the demand fails, right? And then it fails. I mean, initial reaction to the demand failing. After it takes it out, we have initial reaction that fails, and we start shifting order flow on the lower time frame. I wouldn't recommend trading this to go long until this 15-minute structure swing gets taken. And even so, we have a flip zone right above, which is reacting to a important demand before. So there is certainly a chance that this could have happened to keep going lower. But I had a couple of things lining up, including the fundamentals. So Fidelity Fidelity is preparing to file a Bitcoin ETF in return, which should make IPOs like Coinbase, NASDAQ, Coinbase, Tesla that are under NASDAQ to rise up. And that was the speculation, and that was my sort of, you could say prediction. I don't like to predict, but just based on the news that I received this morning, I was expecting NASDAQ to go bullish. And as you can see, it did go bullish. I'm sure they were the main catalyst that drove the price up. Now let's look at why and where I got in the trade. Let me pull up the ranges here. I'm just going to pull up the 5-minute to go over certain things. So we have a London range here. We have a low that was created before London. It gets swept and the high is made, reacts to this 15-minute supply, and then the low that was created in the middle of London gets swept before pre-New York. And then what happens is that the demand looks like it's holding here, even though it sweeps here and then mitigates the more of an extreme side, and to make another create another high. It reacts to this flip, the supply, and it even sweeps it. So to prevent prematurely taking a loss, you should take you should keep track of the order flow and perhaps look at things on a lower time frame. You could even trade the 15-minute, but if you want to maximize your RRs, that's what I'm trying to do here. You want to trade the lower time frame. You don't have to, but that's still my preference at the moment. My friend Cheddar has suggested me to trade the 15-minute, but once again, I need to practice more of that. I just get a little impatient looking at the 15-minute chart, but I totally get what he's saying. Anyways, I had the LPOS drawn up in the 1-minute, 5-minute, and this is just a little supply that gives a reaction to the demand here before taking out the pre-New York demand. And once that gets taken, I took an early loss here. So I tried a long here off of this demand. I thought that we could have initially done that, but it didn't. It created more liquidity so that it can get taken later. And this was also creating liquidity so that it can mitigate into the extreme of the liquidity POI that swept the pre-New York range. Hope that makes sense to you guys. And then, like I said, we had the fundamentals kicking in. And in order to confirm that this is not a fake out or a fake out, you keep track of the order flow. And what happens is that the LPOS both gets taken on the 5-minute and the 1-minute. 5-minute is, of course, more significant. 15-minute, I didn't really check because I usually use the 5-minute to enter, even the 1-minute. In this case, in today's trade, I had the 15S open just to clarify the price action a little bit. So we have this liquidity that was being formed to get taken to target that, right? So we got liquidity to target into the POI and then target later after. And once we got the chalk, you could call it OFRA, right? In fractals terminology, I was willing to take this trade setup. We are still bullish on the higher time frame, and this is reacting to the sweep that swept the London low. So I was willing to trade it. Once again, we had the fundamentals lining up. We are bullish on the higher time frame. And it's a nice trade. I've collected over 20, 30 trades on NASDAQ and maybe even up to 40, 50 trades, including oil, just including the EODs and the actual trades that I've taken. I've gotten more confident on trading indices and commodities. Gold, though, it's still giving me a little hard time because I get a lot of break evens. So it kind of frustrates me because when you're up like 4,000, 3,000 on a trade, or even on a challenge and you break even, it kind of makes you feel like you did all the work for no reason. Anyways, I'm really liking trading the indices. Even Dow Jones, I will, certainly play it here and there. But in this case, I was still following up with the trade, even though I took a loss here by putting the break-even point at this level. I took a loss and took a setup, gave about a little more than 8R. I didn't hold it up to 8R, but still gave me a decent profit though. Like I said, use the fundamentals and the technicals if you're using SMC in order to kind of see the trade playing out better. It just gives you more confidence at the end of the day if you follow with the fundamentals and the technicals. You don't have to. You could trade just the technicals, but it just gives you that little extra assurance when taking a trade. Anyways, hope you guys have a good one.